Second topic of the chapter, Goodwill's accounting. Now, be very attentive. Whenever new partner comes in the business, he should pay to the old partners for their past efforts or not. Straight away, you cannot get the benefit of a well-established business. Like Asta and Palaka running the business, of course, for the last 10 years. Means last 10 years, they established it, made efforts, created a reputation in the market. Khyati directly enters and gets that benefit. Should Khyati compensate the old partners for their past 10 years efforts or not? How to do the accounting for that, we'll understand in this part. How to do the valuation, we already studied in chapter 3. Okay? Means how much should they charge from Khyati, we studied in chapter 3. Either they'll find that value by simple average method, or weighted average, or super profits, or capital average. That we studied value. How much should they charge from Khyati for the goodwill? Okay. Here what we are going to understand, how to record it in the books of accounts. If she pays for that, then how to record it in the books of accounts, we'll understand it over here. Got it, everyone? So valuation we studied in chapter 3. And its accounting now we study in chapter 5. Okay. Now this year, the accounting part for goodwill has been made far more simple compared to the old syllabus. Because in old syllabus there were several situations and confusing. Identifying the situation itself was a difficult task. Now the things have become very, very simple. What you will do is, let me put your pens down, at the end you write it down. I want all of you to understand the concepts thoroughly. Okay. Very first thing what you would do in any of the questions is, whatever old goodwill appears in the balance sheet of the firm, that they will close it. Every question. Okay. So, old goodwill appearing in the balance sheet will be closed. In every question we have to do this first step. Whatever old goodwill value is appearing in the balance sheet will be closed. Goodwill has what balance? Debit. Asset side. To close it, what will you do? Credit. And you will transfer it to partner's capital. And so partner's capital you will debit. Means before Khyati gets admission in the firm, whatever old goodwill is there in the books, that Asta and Palak will close. Now they do it before the admission of Khyati. So they should do it in which ratio? Old ratio. Okay. So goodwill has debit balance. To close it, we will reverse and credit. And before the admission of C, they would do it. So old partners capital account, you will debit. And in which ratio? Old ratio. This will be done in all the questions. If goodwill is there on the asset side of balance sheet. Not there, they are not to be closed. Understood that question, everyone? After that, again they will find the reputation. This is the old reputation already appearing in the book since years. Now when the new partner comes, again they will find the goodwill by the methods we studied in chapter 3. Okay. Now here the new partner has two options. Suppose by simple average method or weighted average method, Asta and Palak find the value of goodwill as 1 lakh. How much? 1 lakh. By any of the 4 methods, they find the value of goodwill as 1 lakh. Khyati, they give 1/4 share in the profits of the firm. Like we have been doing the questions, new partner's share is how much? 1/4. Value of goodwill is 1 lakh. Khyati is going to be given 1/4 share. So how much she should compensate them for the goodwill? 25,000. Her share will be 25,000. Value of goodwill they have done is, valuation they did is 1 lakh. New partner is coming and in profits the new partner is going to get 1/4. So how much they'll charge for the goodwill from her? 25,000. Now Khyati has two options. Either she brings that 25,000 in cash and gives it to them, or she does not bring. The old partners politely, decently will request, our reputation is 1 lakh, you please bring 25,000, your share in that. They'll request. You bring 45,000, we'll take it. Even if you don't bring 25,000, we will take it. Means she has to pay it and they have to recover it by hook or by crook. So there are two alternatives. Either Khyati brings that amount in cash or she does not bring, but still they take it. Now the question arises, if she does not bring only, then how will they take it from her capital? Suppose she brings 60,000 as capital. Then they'll say, very good, 60,000 you give it, 25,000 they'll take. And they will say, your investment in the business is only 35,000. So two things are possible. Either you bring 60,000 plus 25,000. If you don't bring 60,000 plus 25,000, then from 60,000 capital, we will take 25,000. And we will show your capital in our books of accounts only 35,000. So practically, there are only these two situations. Either the new partner brings his share of goodwill in cash or does not. And what shall we do if he does not bring? Take it from his capital. Okay. Now how to record it? If new partner,
Sir,
yes,
if the capital is only 25,000 or less than it, then
no entry. They'll not take her in the firm. Without the capital, how can a new partner? Okay. If new partner brings his share of, yes, silence now, goodwill in cash. If new partner brings his share of goodwill in cash, we call it as premium method. Means whatever amount the new partner brings, we call it as premium of goodwill. So in this situation, first entry will be whatever cash the new partner brings. For that cash account debit, cash comes in, debit what? Comes in. And goodwill 1 lakh into new partner's share 1/4. So he has to bring 25,000. Understood that? Premium is an income for the business, whatever new partner is bringing. Credit all incomes and gains. So to premium of goodwill account or premium for goodwill account. Did you understand this? Now, Asta and Palak. Khyati is admitted. Asta gives 1/10 from her share. Palak gives 2/10 from her share. Okay? Practically, Khyati is getting 1/10 from, 2/10 from Palak. So if she is paying for any reputation, should she pay more compensation to Palak or not? Because she is giving her more in the profits. And should she pay less compensation to Asta or not? Because she is giving her less share from the profit in future. So whatever premium they bring, we will distribute it between old partners, but in sacrifice ratio. Whosoever is sacrificing more for the benefit of new partner, he will get more share in goodwill. Whosoever is sacrificing less will get less share in goodwill. Got it, everyone? So whatever this premium the new partner is bringing, the benefit of this will go to old partners in which ratio? Sacrifice ratio. Understood the logic? So two entries will come. Premium for goodwill account debit to close it. Earlier it is credited, so to close it now you will reverse and debit it. And you will transfer it to old partners capital account, but in sacrifice ratio. Any confusions in this? Why sacrifice ratio? All of you are clear with this? Whosoever gives more benefit to the new partner will get more compensation. Whosoever gives less benefit to the new partner will get less compensation. Any confusion so far? Now, this 25,000, if they keep in the business, well and good, no entry. It's already there in the business. The amount is already there in the business. But if old partners withdraw the goodwill, if old partners withdraw this amount of goodwill, second entry, then old partners are the receiver, debit the receiver, old partners capital account debit, cash goes out, credit what goes out to cash account. And with what amount? Proportionate amount. Means whatever old partners have credited to their capital account, if they withdraw half, you'll reverse and debit it with half amount. Suppose it is premium of goodwill to Astha's capital 10,000 to Palak's capital 5,000. Just for example. If they withdraw half, then Astha 10,000 is half. Astha capital account debit 5,000. Palak 5,000 is half. Palak's capital account debit 2,500 to cash account. So this entry you'll pass with whatever proportionate amount they withdraw. Any confusions with this so far? Okay. There is one more point in this which I'll explain you after discussing the second alternative. All of you are clear with this? And if they keep that amount in business only, then no entry, because that amount is already there in the business. Okay. So first alternative is new partner brings his share of goodwill in cash. Second alternative is if new partner does not, if new partner does not bring his share of goodwill in cash, then as I said to you, you request the new partner if he brings well and good. If he does not bring, then also well and good. What will you do if he does not bring? You take from his capital. So, new partner's capital account debit instead of cash. Instead of cash, directly new partner's capital account debit. Got it? And now he is not bringing any premium. So can we credit premium? He is not bringing that. As such, in these two entries, premium, credit and debit gets cancelled. And directly the benefit goes to? So straight away you will take the money from new partner and give it to old partners. Two old partners capital account in sacrifice ratio. Are you able to understand this? Straight away you take the money from new partner's capital. So instead of cash, new partner's capital account debit. And we cannot credit premium because he has not brought only. As such, premium account gets closed. And that amount was distributed between old partners in sacrifice ratio. Directly you will take the money from new partner's capital and give it to old partners in sacrifice ratio. Understood that? One more thing is possible. Mixed. How much Khyati should bring 1 lakh square foot? She says, I can bring 10,000. So, 10,000 she will bring, you'll pass these entries. And remaining 15,000 you'll take from her. So, mixed. For 10,000 what she brings, you'll pass these two entries. And for 15,000 you'll take the money from her capital. Did everyone understand this? One more last option is possible. Khyati says, I'll give 25,000, 15,000 and 10,000 to you. But outside the business. Asta and Palak say, we want that. As such, if you bring, we may withdraw. You give it outside only. At least no trouble of making any books of accounts. Unnecessarily the books show, then withdraw. So directly outside the business, privately, Khyati gives 15,000 and 10,000. No entry in the books of accounts. This is the only situations possible in the practical question. So understand it once again. First of all, any long question, what we will do? If any goodwill appears in the balance sheet, you will close that. In any of the questions, first step you will do that. What entry will you pass to close the goodwill appear in the balance sheet? Old partner's capital, and this you will do in? Before the new partner comes, you are doing that. Two goodwill. Got it, everyone? And then they will value the goodwill again. In that they will ask the new partner to bring his share. Two things are possible. Either the new partner brings cash or he does not bring cash. If he brings cash, cash account debit to premium for goodwill account. Goodwill into his share. And that premium for goodwill you will distribute between old partners in sacrifice ratio. Any confusion in this? And if they keep that amount in business, okay. If they withdraw, then old partners capital account debit, they are the receiver, debit the receiver, cash goes out to cash. With, if they withdraw half, then with half amount, 1/4, then with 1/4 amount. And if new partner does not bring cash, then you will take the money from his and directly distribute it between old partners in sacrifice ratio. Further, one more thing is possible. That is, it is quite possible that after the admission of Khyati, Astha's ratio increases instead of decreasing. Means Astha also gains. Instead of sacrificing, Astha also gains. Okay? It may happen that you find the sacrifice ratio and for one of the old partners it comes negative. So if sacrifice ratio comes negative means it's a gain. Now, should even Astha compensate Palak for goodwill or not? Because after the admission of Khyati, Astha also gains. So Khyati will also give compensation to Palak. Astha will also give compensation to Palak. So if after finding the sacrifice ratio you find then any partner is gaining, then that partner also you will debit. Gaining partners capital account debit, and what the new partner has brought plus the partner who is gaining, both of them will give their share to old partner who is sacrificing. Okay, this will come very rarely because generally the old partners sacrifice. In case if any of the old partner is gaining, then that partner will also have to compensate to the sacrificing partner. So that gaining partner's capital account also you will debit. Understood this complete portion? That and completing it you can leave. Yes. Please write it fast without talking in between so that you don't leave any more late. I'm writing the note that if goodwill is paid by new partner to old partners privately outside the business, then no entry will be passed.